Glad to have you back. Barely 6 months after assent into the Petroleum Industry Act PIA 2021, President Muhammadu Buhari on Friday, the 7th of January 2021, inaugurated the board of the newly incorporated Nigerian National Petroleum Company Limited, with the mandate to ensure that the country's oil and gas sector becomes a more viable petroleum industry that will attract investment to support economic growth as well as generate employment. With the Petroleum Industry Act in place, government is now mindful that there should be a new way of doing things in the oil and gas industry, as the new reforms is set to reposition the oil and gas sector to a commercially viable and competitive industry in line with global business dynamics and best practices. Unfortunately, the new Omicron variant of COVID-19 is already affecting oil price because of the adverse impact on demand triggered by the new restrictions imposed by various countries. It is therefore imperative that the PIA results in aggressive exploration and development activities to boost the country's proved reserves, which can ultimately lead to an increase in OPEX quota. Well, joining me now via Zoom to take a critical look at this is an energy analyst at Stirs Business, Noel Okwodi. Noel, it's good to see you. Happy New Year to you.
Happy New Year to Lopez. Thanks for having me.
Yes, let's go straight to this. Finally, PIA has been signed. Well, that's no more news. But implementing the PIA is something that we've all been talking about. And we see NNPC becoming a limited company. And we see the inauguration of the board. What would you say about the pace of work after the signing into law of the PIA? What's your assessment of what we have since then?
Well, considering that the PIA was only signed in August last year, I'd say things are moving pretty quickly. But that's not surprising because the Nigerian oil sector is in dire need of investment and just a restructuring generally. So it's not surprising that the government is moving really fast to implement the PIA. But yeah, the pace is really good. It's fast and as it should be.
Now, the board has been charged to ensure strict compliance with corporate governance and make profits. I want to know what should be the quick wins? What should they start to do immediately if we are to really get to work to make the NNPC look like other national oil companies across the world?
Okay, so first of all, we have to consider why we need a new board and why the restructuring is even happening in the first place. So like you said, we need transparency, and this is because the NNPC, we want to attract investors into our oil and gas sector. So first things first, to just be more transparency, so more reports. We need to know what's happening in NNPC. In terms of making profits, first thing on the agenda should just be to clear the government debt. So in proper oil companies, you don't see the government borrowing from the national oil company or the national oil company taking from the government. The national oil company is just like, it should be a regular oil company. It shouldn't be above the law. So when I say this, I mean that they should pay dividends, they should pay royalties, they should pay taxes to the government as other companies in the oil and gas sector do. So these are the things that we need to see to for people to have for investors to have certainty that things have changed. These kinds of transparent measures and transparency measures are just things that we need to see more regularly from the NNPC.
Well, let's also speak around the downstream now. Yes, let's stay a little bit with the downstream pace of the oil and gas industry. At the moment, the NNPC remains the sole importer of PMS. I'm worried. When do you think that this market will open up for marketers to come in? Because we expect PIA to open up the market, create more jobs, let people get into the system, and not just waiting on NNPC alone. What do you make of this?
Well, for people to get involved in the downstream sector, the first thing that needs to be done is to remove the subsidy. So right now, NNPC is the sole importer, and that's because there's a market price, right? And then there's the actual price of petrol. So NNPC pays that difference. So when they import, they pay for that difference between the price and the market price. But if you want people to get involved in the downstream sector, the first thing has to be market based. So the forces of demand and supply have to control the market. It can't be that there's a set price and then people have to, and then the government is paying the difference between. That's not efficient. That's not an efficient market, and that's why we're seeing like the downstream sector is not efficient at all. We have marketers complaining. Marketers are not happy with the way the market is, with the way the downstream sector is. And so that removal of the subsidy is the first step that needs to happen. Then we'll see better transportation networks. We'll see people investing in the downstream sector because then they know that, yes, this is a market and this is a market where we can make money.
Great stuff there. Now, let's stay also with the crude oil market. Now, I see that the price of crude seems to be fair despite the Omicron challenge. And let me read this to you. The World Bank is saying that higher oil prices will drive Nigeria's economy by 2.5% in 2022. Now, do you think we could see a spike to about $100 per barrel in 2022?
Well, speculating on oil markets is never a good idea because things just change drastically, and especially with the coronavirus pandemic. Like, Omicron came out from nowhere. We thought that it was going to be a big threat, and then it ended up being that Omicron is not a threat at all, like to people's health, and then we saw economies still staying open. So as long as the pandemic is still happening, like COVID is still real, we don't know what's going to happen. But let me speak on the World Bank's prediction. So oil prices right now are really good. And this is just because OPEC is still slowly opening up and increasing their quotas for their members, and demand is also increasing. So, but the thing is, Nigeria's revenue cannot change unless there's a change in oil production. So revenue is a function of price and quantity. Even though price is high, if quantity is low, then you're not going to take advantage of that high price. So Nigeria's oil production has been around 1.5 million barrels per day on average, around like between November and December last year. That's even like, we've even seen lower, we've seen like 1.2, 1.3, but we're supposed to be doing 1.8 according to our budget, and we have a capacity of 2.2 million barrels per day. So unless we see these increased quantities, then we can't take advantage of the higher oil price. So that's something that we need to focus on rather than just the price.
Don't mind me, I'll stay again with refining. When we talk oil and gas industry and we talk deregulation, you mentioned that, talking about subsidy removal, when we're talking about marketers getting into the business all again. Many will say that, or Labour in particular, have argued that they don't want an export-driven deregulation. That has been their argument, that yes, they might be ready to let subsidy go, but not being driven by this importing of petroleum products into the country, because that will definitely affect us because of the forex issue. Now, I don't know, what are you thinking along that line? Because refining is the only solution to us importing petroleum products.
Yes, so I think Labour's problem, and like the problem of every Nigerian, is mainly the price. So obviously, when the subsidy is removed, prices are going to get high, and that has implications for our inflation rate. It's not only going to affect the price of petrol or transportation, it's going to trickle down to every other part of the economy. And that's because most of our goods, our food, everything that we do in Nigeria is transported by road, because that's like the most reliable transportation network that we have. So an increase in fuel prices will affect everything else. But the thing is that stopping importation of petrol and switching to refining our own petrol is not really going to affect the price as much as we think it's going to. And this is just because even when like let's say, for example, the Dangote refinery comes up, Dangote is not going to sell his petrol at a cheaper price than the market price because he can easily export to other countries and get more money. So it's when the market is open, it's more about business. So it's about demand and supply. And it's not going to be, because it's produced locally, then it's going to automatically be cheaper. So that's something that people need to understand, I think.
Let's continue this conversation. It's really getting interesting. Do you also think that we are mindful of the carbon zero aspirations, looking at how we can ensure total alignment with the global energy transition realities? Do you think Nigeria is keen into that?
Well, in one way, I would say we are, but I'm not sure. I'm not certain that we're making enough moves. So the president announced that from 2020, that this decade will be the decade of gas. And as we're seeing, gas is a hot commodity right now because it's a transitional fuel. So before we can have 100% renewables, gas is the cleaner and better alternative to oil and even coal. Coal is like a no-no right now, but Nigeria doesn't even have coal. Like most of our reserves are actually gas. So we need to take advantage of that. And I don't think we're doing enough in that regard. But even in terms of renewables, so we have like mini grids, solar mini grids, solar home systems, but we don't have large scale renewable energy generators. And that's just because in Nigeria, gas is still cheaper. So it's about the cost efficiency of it. So I'd say we should focus on gas, but also because of net zero, you can't have a subsidy on petrol. So coming back to the subsidy now, you can't have a subsidy on petrol and say that you're serious about reducing your emissions because you're subsidizing fossil fuels, which are the main reason why climate change is happening. So that's something so even for climate change, what I'm just trying to say is that even for climate change, we're not doing enough. We have to remove the subsidy and we have to focus more on gas and just put our focus there, especially now that gas is still seen as the cleanest fossil fuel. Yeah.
Well, let us wrap up this conversation with gas pricing. You've talked about gas, and I won't let you go until you say something around that. We've seen what has happened, government trying as much as possible to do something around the pricing. It was about more than 100% hike in what we saw. And many will tell you that Nigeria has both proven and unproven reserves of gas in this country. What do you make of gas pricing generally as a player in the industry?
Well, it's one thing to have gas, but it's another thing to use it. So we have the ninth largest gas reserves in the world. But so we're talking about cooking gas, I'm assuming. So cooking gas has to be, it's not just, you don't just get it from the ground, it has to be refined. Natural gas has to be refined to get cooking gas, and which is LPG that we use. So right now, the NLNG, the Nigerian Liquefied Natural Gas Company, they are the major refiners of gas in Nigeria. But the thing is, they are only able to produce 30% of Nigeria's gas demand. The other 70% has to be imported. And when it's imported, you know that that's more expensive, especially now. So the international gas, the gas that we're importing will be priced at international prices. And right now, like I said, gas is in high demand because gas is the cleaner fossil fuel and is a better alternative than oil or coal. And like everybody is aware of net zero and our carbon footprint and just climate change in general. So that's driving the demand for gas. And when you're importing gas, that means you're importing and you're competing with countries like Europe, Asia, and other countries and other regions of the world. And that's just what's driving the gas price. So it's not that we don't have gas, it's that we don't produce enough cooking gas for domestic use. So we have to import.
Gas infrastructure remains key and it's capital intensive. In 1 minute, can you say something around that?
Sorry to Lope.
I said gas infrastructure, capital intensive. Can you say something around that? Can we do anything? How can we get that to work? PPP, or what do you think?
Oh yeah. So right now, NLNG is building their train 7, and it's supposed to increase our gas capacity by, I think, 20% or so. So, and it's a $1 billion project. It's not a cheap. It's like you said, it's capital intensive, very capital intensive. Well, because of how lucrative gas is, like NLNG is one of the most profitable companies in the country. That just shows you how profitable gas is. So we could see private players coming into the gas market. We've already seen Shell they have their Shell Nigeria Gas Company. Total Energy is going into gas. Like, gas is a hot commodity right now. So hopefully we see people going into cooking gas production, but I think the focus right now is gas for energy generation and for exporting. So we see more private companies coming into cooking gas production. So we'll keep our eyes open for that.
Noel Okodi, thank you so much. I've been speaking to energy analyst at Stirs Business. Thank you so much for spending your afternoon with us. We do have more. Hope to have more of you in the new year.